Today's presentation, we're going to talk about farms, food systems, and forests, and how we can think about a framework to invest in sustainable agriculture. When one thinks of agriculture, very few think of it as a sector where leading edge innovation takes place, or in other cases, the food at the supermarket is taken for granted without much thought about the complexity of the food system. And it is my hope that over the next few minutes, the background for sustainable agriculture will be better understood, as well as the importance of the next multi-year agricultural revolution, which not only has some fascinating innovations, but at the same time it is necessary for humanity's survival. Agriculture represents about a quarter of global GHG emissions. As we saw at the onset of the pandemic last year, most of us were okay with giving up transportation and travel, which are other categories of emissions. But what about food? And it is this dilemma that makes agriculture part of a problem, but also part of the solution, given the obvious need to feed ourselves. With this in mind, the chart on the right outlines the challenge ahead. As population grows to almost 10 billion people by 2050, which starting to today, this rate equals to adding the equivalent of the US population every 5 years. As a result, a future food gap has developed, as an estimated increase of more than 50% in calories produced is needed to meet demand from a growing population and higher incomes at the global level. This assumes a demand increase for more resource-intensive foods as incomes grow, and this trend is generally correlated to greater protein consumption. Importantly, indiscriminate expansion of land is not an option, as already about 50% of habitable land is used for agriculture. And we think this food gap is an investable opportunity. We believe that companies that provide solutions to solve this food gap are well placed to be rewarded by the market. An additional challenge for agriculture is the interconnection with weather and climate, as it is clear that weather conditions directly impact crop conditions. And despite impressive increases in productivity, which we'll talk more about this later, crop yields can be significantly affected by extreme weather. The chart here shows crop condition progress for U.S. corn. Each line represents a different growing season since 2011, displaying weekly data from June to September for the percentage of corn defined to be in good to excellent condition, which then becomes a determinant of overall yield. And as we can clearly see, there is a fairly stable group of lines where there can be variability in a given year, but typically this is not dramatic. However, we see clearly an outlier corresponding to 2012, which is a red line, and now we turn to explain what happened in the next page. An unexpected drought hit the U.S. Corn Belt in the summer of 2012. The map on the page centers on the Corn Belt states where the color tones toward orange and red indicate the greatest drought severity. As we saw previously, this had a devastating impact on crop conditions with subsequent effects in yields, total productions, and prices. This highlights how extreme weather events, which may become more frequent amid changing climate, can overwhelm yield gains attained through years and years of research and innovation. And it is not just rainfall, uncertainty, and drought. Other threats to crops due to climate can include new weeds and pests. With this backdrop so far, we now walk through critical points in agricultural history that correspond to agricultural revolutions. I was told to keep this presentation to only a few minutes, but hopefully we can go all the way back to 10,000 BC for the first agricultural revolution, which was essentially the domestication of plants and animals leading to the first human settlements. The second agricultural revolution happened much later, in the 1700s, and included land rights and crop rotation. And the time series shown on the charts are long-term cereal yields, and we can see an increase over time connected to this technological advance. In the 20th century, global population was growing rapidly in the post-war period. In the late 1960s, academics and commentators were sounding the alarms, predicting global famine in the decades ahead due to the rapid rate of population growth. However, to counter this, agronomic innovation in the third agricultural revolution, which included such things as high-yielding seed varieties, mechanic farm equipment, modern irrigation, and crop protection, led to a significant increase in crop yields, as seen by the steep rise in the lines at the right end of the chart. This productivity increase is forgotten by many and taken for granted in the present day. but it led to food security for millions of individuals, especially in places like India and Mexico. Moreover, and although the attention now has centered on the environmental impact of agriculture today and in the future, the current situation in terms of land and resource use would be much more worrisome if not for the technological advances that took place starting in the 1960s. And while a worst-case disaster was prevented by this third agricultural revolution, the planet is now in need for the next set of breakthroughs in agricultural innovation that can enhance productivity while mitigating further impacts to the environment. And it is here where the next suite of technology solutions can turn into an investable exposure. So after the background outlining the problem in the previous pages, we now turn to the solution. That is, a framework for investing in sustainable agriculture. Pure-play niche innovations for specific sustainable solutions are often found in laboratory work or in the venture capital private equity domains. VC funding in the areas known as agtech and foodtech has grown impressively in recent years. For the trailing 12 months through the first quarter of 2021, $7 billion has been raised in agtech deals. Another more specific example is there have been about 50 companies started in the cultivated meat value chain since 2017. Multilateral development banks committed about $3 billion for agriculture and forestry climate finance in 2019. These capital formation trends are extremely encouraging. However, our investable universe is publicly traded equities, where the focus shifts towards organic innovation within established players. But more and more, we're also seeing significant involvement from public companies' innovation or venture arms in those specific pure plays in the private space. At the end of the day, we think in many instances, the expertise and footprint of established companies will be welcome for successful scaling and commercialization of innovations at the lab or VC levels. In the next pages, we then turn to more detail in our framework on how to build investment exposure. As we think how to construct the exposure, this opportunity set is best addressed with a solutions-oriented approach that targets companies with products and/or services that solve related challenges to sustainable agriculture. And uncovering these products and services requires looking beyond companies found directly operating in the farm or woodlands, so to speak, to other sectors that are sources or can be sources of new processes and technologies. This means that the standard sector industry categorization can limit the investment universe and hold back idea generation. On the page, we illustrate the extreme case of this idea. Out of 157 gigs of industries, only 3 can immediately be categorized as agriculture related. We think many single exposure portfolios, which we call fundamental factors, can benefit from customized categorization of the investment universe, as it helps to break up a complex, multifaceted problem, the food gap in our case, into conceptual categories, which we call segments. And for sustainable agriculture, these segments are environment, food supply, and resource management. Environment starts from the idea that the best carbon capture technology is photosynthesis. And from here, biochemicals and biomaterials from wood feedstocks, which when sourced with sustainable forestry practices can create new businesses with sustainable growth potential. Food supply refers to what we like to call the proteins of the future, which essentially refers to a diversified protein basket. As we mentioned, incomes growing leads to higher demand for proteins. So how will this protein basket look in the future? We think there's a place from anywhere from traditional animal-based proteins from beef, pork, chicken, and importantly salmon, to plant-based meat alternatives, and lastly, cell-based or lab-grown meats, which we'll talk about more later. But also food waste, which it's estimated that 30 to 40% of food is wasted. So we think this is a huge opportunity for technologies and innovation that can help tackle this problem. Lastly, resource management largely encompasses the trend that contains the suite of technologies in precision agriculture, which can be automation that is related to auto steering, variable rate technology, which is centers on the simple idea that not two fields are alike, but mostly that no two areas within one single field are alike. So this requires different rates of terrain elevation, soil quality, and plants that require different levels of inputs and rates of harvesting that can be adjusted on the fly by technologies. And on top of all of this is data and software management. We'd now like to talk about in more detail about our solutions approach and utilizing the full spectrum of available tools that can be translated to investment exposures. In this particular example, we're centering on our food segment and how to solve for the trend related to peak meat that is expected to slow down in meat consumption globally. Setting the stage, the chart on the left illustrates the growth of meat consumption per person for different countries and regions. We can see how the acceleration of income growth in China and Brazil coincided with growth in meat consumption, playing catch-up to the US and Europe. However, some more recent research is suggesting meat consumption may start declining around 2025, representing a classic case of disruption for the $1.4 trillion global meat market. So how do we think about this in terms of investment opportunities? The table on the right represents a framework for our thinking. So we'd like to say that it is unlikely to have a winner-take-all scenario, but rather a diversified protein basket will prevail. This table shows how we can qualify different proteins along environmental impact and a combination of nutrition and price points. Despite seemingly negative marks, we think there is a place for beef in the future. This is because there are developments in specialty chemical companies producing feed additives that reduce methane emissions, as well as greater awareness for sustainable pastures. Salmon has the lowest carbon footprint of all traditional animal proteins, and its nutritional profile is also very favorable. Aquaculture is not without downsides, but salmon farming companies are a direct way to gain exposure. In newer developments, cell-based, also known as cultivated meat, is promising low relative environmental impacts along with eliminating animal slaughter altogether. However, as with any new technology, price points need to come down to be viable commercially, and perhaps more importantly, regulation and food safety hurdles need to be cleared. Plant-based meat alternatives promise a much lower resource intensity, but on the nutrition and price axis, the benefit is not as straightforward, as these end up being processed foods after all, that have only been around for a few years compared to millennia for traditional animal proteins, where their effects on a human diet is better understood. All in, we have outlined an example or case study or short case study on how our categorization allows us to center on a segment, and then our solutions approach guides our thinking for the investable universe. So in conclusion, solving the food gap represents a compelling investment opportunity of which sustainable agriculture practices are central to success. And in our view, companies aligned with solutions to address this challenge should benefit from this multi-year trend. Innovation is accelerating rapidly in agtech and food tech, but many ideas may require support from established players, both to reach scale and to follow through on commercialization. And lastly, as we think a solutions approach, utilizing a complete toolkit that covers farms, food systems, and forests is a pragmatic approach to the multifaceted challenges posed by the intersection of agriculture and sustainability.